Hi, welcome to this video day, 1st of December. It's Sunday, just going to give our weekly Forex market review, pick out a few trade opportunities that we think could offer good risk to reward trades for the week ahead. We will go to the charts in a moment. Now, we have had very low volatility over the last few weeks in the Forex markets. Will that continue? I personally think the signs are already there of a pickup in volatility. Stock markets are very much dictating what goes on in Forex markets. And I'll just go through the correlation before we look at the best pairs in our view in a moment. Now, in terms of December actually traditionally tends to be a good trading month. I hear a lot of people say, well, December, you should pack up and come back at the end of the first week of January. Statistically, that's not a good idea. If you look at December, it's traditionally volatile, and particularly towards the end of the month, between, for example, December the 26th and January the 7th, the vast majority of Forex pairs make their high or low for the following year in that period. I'm hoping the volatility obviously picks up before the end of December. But yeah, it is a good trading month if you look back over the years. Now, in terms of the charts, we will go and take a look at them right now. But please do keep in mind, it is my view as of right now. It can, of course, change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, you can click on the link beneath this video and get live access to our member center. I did load up a video on Friday, which I don't think I released to subscribers, where we put a Black Friday offer on our course until the close of business tomorrow. You can get 25% off life membership. Right, let's go over and look at the charts. I'm going to use the charts on our member center because I've just been doing my weekend analysis. In our member center, and just very quickly before we go and look at some charts, I'm just going to explain to new viewers how we do our analysis. If you're already familiar with how we do it, just skip forward the next 2 minutes or so. Also, for new viewers, I did do a brief guide to our member center in full, a video yesterday. You can check that out. But in terms of the charts, you're going to see in a moment they're all going to be daily charts. So any work off the daily time frame, don't go down to lower levels. We'll always set our orders in advance, and we'll only look at price action twice a day. Once when London opens up in the morning, and then once into the New York close. So set and forget trading. We don't use many trend lines at all. We don't want them. We only want big levels, no matter to key institutions to find them. We will use weekly and monthly charts, see if the levels back up the daily levels. If they do, that makes them more valid for us, okay? And we'll also always do a study of sentiment. This helps keep our charts clean. We'll have a directional bias from the sentiment, which means the technicals just be kept extremely simple. Yeah, we want to know the buying and selling power behind the chart. So we'll do our own study of sentiment, and we use our favorite tool in Forex trading, the COT Net Traders Positions, which I'll make reference to as we go through the video. It's a great tool. It tells you where big money is sitting in the market, actual positions of two groups, speculators and commercials. Commercials are smart money. When commercials diverge away from speculators in a big way, we'll normally want to go with the commercials. Helps you find turning points in advance you can't see from the technicals alone, and will help you postulate how far a trend might go. We're looking generally for moves of 200, 500 pips or more. 200 is the least amount of pips we're going to be looking for as a general rule. Yeah, we don't get caught in the noise. I think the COT Net Traders is great for spotting big trends and also giving you the confidence to hold them. Like I said, I'll make reference to it as we go through the video, but if you want to look at a full explanatory video on how we use the COT, just look up COT Net Traders indicator on our channel, and there is a video. Now, like I said in my intro, before we go and look at the currencies, we can go and look at stocks, because what's going on in the stock market is having a big influence on the Forex markets. Just make my charts a bit bigger. This is the S&P 500. Now, in terms of the S&P 500, we gap higher here, break out to new multi-year highs, and we just keep going. Okay, it is low volatility and it's low volumes as well. But with the stock market going up, that's killed volatility in the FX markets. Now, what I would say is this is a low volume rally. Volumes are down around 70% from just a few years back, and retail traders are pulling money out of the stock market. They're not buying into this at all. I think they're taking out about 169 billion in the last few months. So if you've got a low volatility, low volume rally, it's dangerous because it's vulnerable to a break. And when they break low volume rallies, they break aggressively. We don't think there's big money on the sidelines to come in. Yeah, retail traders are basically running for the hills. So you could see a big correction. If we get a big correction, that will really firm the safe currencies, USD and JPY, for example. However, even with this big move up in stock markets, the risk currencies should really be powering higher with the stock market. They're not. They're not mounting significant rallies at all. So my own view is, just as a general point, I like safe currencies over risk currencies. Now, just while I'm in this section, I just want to look at the dollar index because, when we see the dollar at the moment, I just don't think it's got much downside. We had this big sell-off here, and we were saying at the time all the bad news was in for the dollar and it would probably rally. It does rally up through the 20-day moving average, comes back, basically 20-day moving average finds support. Now, last week, not too much volatility at all. But dollar now, I think, going higher. Little downside in it. And I just actually one more contract I want to look at, which is crude oil, because this will influence the commodity currencies. Okay. And also, if crude falls really hard, we saw a nice move down on Friday, that can affect risk on sentiment. Okay. But certainly it can affect the commodity currencies. If crude falls, other commodities tend to fall in sympathy. Okay. So the AUD, the CAD, NZD, they can be impacted. And if you are trading the Forex markets, you've probably got crude on your platform. I think it's a great sell in terms of a long-term trade from current levels, get down to 35. That's a 40% decline. That looks a really bearish candle. Came up to test this resistance level. Actually, just narrowly missed our stop. Now a nice big move down. If that really gets running to the downside, it'll affect risk on and obviously the commodity currencies. I just think it looks a good trade in itself. Okay, so I really like it. But next week, for sure, keep your eye on stock markets, what they do. A break could come at any time. It might not come, but if it does, just be very alert because volatility in the Forex markets will really move up sharply and be in favour of the safe haven currencies. Now, what we are going to do is we're going to look at the currency pairs. So I'm going to look at 4 pairs, which are crosses and more minor pairs. First of all, that I'm really interested in, then we'll go through the majors and a few others. So let's go and take a look at the first of the Forex pairs. All right, GBP AUD is the first pair, and in terms of the British pound, it's been a major focus of ours over the last few months and remains so. We particularly like it long on the commodity currencies, and the GBP AUD has been a good performing pair for us since we came in long near the lows. Nice move up, one decent retracement back to the upside. We're now above 191. I don't see much downside. If we break Friday's high, we should accelerate to the upside. If we go below 190, I just buy back through the level, or if we approach this level, just buy any strength off it. There's also the 20-day moving average there. Okay, going up to 2, so another 900 pips potentially. Got 400 pips so far from our latest entry. Pound is a safer currency than the Aussie dollar. Pound's going up, we've got risk on. Get risk off, the pound will go up even quicker. Either way, we think it's going up longer term. And in terms of when we're trading the markets, regular viewers know this, but just for anyone new watching, we always find it a good idea to have a long-term focus. You very often have long-term focus for months in a pair. So just trading this one from the long side, we're not changing our view. Okay, you do get stopped out along the way, but we've made really great profits from this pair and also from the other two commodity currencies. More upside to come. Just one other point, we're doing all three. Why? When I say all three, I mean GBP against the CAD and the NZD as well. They're all correlated, the commodity currencies. We're just not sure which one is going to go down the most on the British pound. So we've done all three. Sometimes I find if you pick one, it's the one that really lags. So doing all three means we won't get the best, we won't get the worst. So yeah, more upside to come. CAD JPY, this one has not come off for us yet. We're hanging around our entry. Now, in terms of CAD JPY, CAD a risk currency, JPY a safe currency. It's the number one safe haven. We've had, for a few months in the stock markets, really bullish price action, and yet the yen has strengthened on the CAD. Okay, the CAD's having a bit of a rally. Looks a limp rally to us. We expect resistance to hold, but I think we're going to get through 82 to really, see volatility increase to the downside. Then we should go to 79 and 70. If we do break up towards the 83 level, which is where our stop is behind, I think it's a sell off the level on any weakness whatsoever. In terms of the CAD, done individual videos on the CAD. It's a currency that is one that is going to go down on all other majors. In our view, it's the most overbought. Commercial smart money has sold it hard. Speculators have bought it. Two groups are at 2-year extreme. A lot of people talk about good data coming out of Canada. We had good data for the last couple of months. The CAD hasn't really strengthened. It's in the price. Speculators have already bought on the fact the Canadian dollar is doing pretty well, but the warning signs are there that the Canadian economy is slowing up. Speculators will get taken out on stop. Like I said, it hasn't come off for us yet, but I'm hoping shortly it'll break that 82 level and gain traction to the downside. So one to keep your eye on. USD MXN got quite a reasonable position in this one. It's a very volatile pair. What we like about it is we came down here, a record net short dollar position was built up by speculators and commercials bought hard. And the dollar has gone up. It's been pretty choppy, but dollar moving to the upside. Now, I did do a video last week where I was saying if these two bodies over here got taken out, then I'd have expected follow through buying. We did get up to the two bodies and slumped back. I think that was because it was Thanksgiving. There wasn't a lot of volume in the markets, but we steadied up on Friday, back through 1960, 2020, then 2050, which is just off the top of my computer screen. Really good risk to reward trade, and that big speculative position, if it gets hit on stop, you're really going to see volatility pick up. You get something like this, hopefully. Very big move to the upside, nice and volatile. I think that can happen again. MXN, real risk currency, isn't it? Dollar a safe currency. The only thing going for the peso, or the only reason speculators are short the USD, is because of the interest rate differential. There's nothing else good about investing in the peso. It's just the interest rate. Speculators are already exiting. We've got risk on. USD going a long way to the upside. Right, and next pair, USD PLM. It's a euro proxy. I'll come to the euro obviously in a moment. If you're bearish of the euro, my view is sell the proxies. Why? Because if the euro goes down, the proxies will go down quicker. And if you've got let's say the PLN, you don't have much what would I call it, stop hunting going on in USD PLN, because there aren't a lot of speculators. Of course, in Euro USD, you've got massive amount of institutions basically hunting stops. You tend to get kind of smoother moves in the proxies. And I'll come to a few more in a moment. This is one I really like. We're in a bit of profit, but not much. Came in above 20-day moving average, above 385. Sort of grinding to the upside. I don't see it coming back towards our entry. I'll put our stop above our entry. We're going to let this one run. I expect volatility to pick up. So we like the look of this pair. Right, let's go now and look at the majors. Right, Euro USD. Now, in terms of low volatility, it's historic lows in this pair. I think since I did my last review, we've had about a 10 pip move since the last video. That's how low the volatility is. My own view on this pair is yes, the volatility is low, but it's going to pick up pretty shortly, in my view, and we're going to see higher volatility. But even if we don't, upside is just so limited in this pair into these two levels here. 111 is really strong resistance. I only got 100 pips in this one, but the volatility is so low. A lot of people have said to me they quite like this pair because it's safe, limited upside, a lot of downside, and you get a really good carry on it as well. Um, so you do quite a big position, pick up the carry interest, and there is a little bit of capital appreciation so far, but not too much. Hoping that's going to change. Eurozone is in total mess. I've made that point clear in numerous videos. Heading for a recession, central bank negative rates, stimulus, a lot of problems in Eurozone that could just be the trigger for higher volatility. It hasn't happened yet. It's not my favourite pair. Just saw me do USD PLN. I prefer the proxies, but Euro, yeah, I mean it's in inverted commas pretty safe short because just not much upside, a lot of downside. The carry actually prevents a big upside move because institutions just slap it when it rallies. Okay, so we'll see with this pair, but not the most interesting, but hopefully it does become interesting soon. Going to GBP USD, I've cut our position back in this one. Again, it's like the euro, we've got 100 odd pips, but we're traveling sideways at the moment. I will potentially add on a breakout, but you got sideways consolidation, volatility is low. I personally think the pound's got more upside, but I do prefer the GBP against commodity currencies against the euro, which I'll come to in a moment. What have we got next? We have got AUD, USD. Again, they're just about 120 pip profit. They're all just around the 100 pip mark so far. So not much movement. But again, I don't see much upside in the Aussie. And I think, 68 is a good level to sell back to. Basically stop behind this 20-day moving average in the second line of resistance. If we can break chart lows, if we go down to 60, we have had all this talk about trade optimism between the US and China. They're going to do a deal. That isn't even helping the Aussie, is it? Going down. In our view, upside limited, but again, low volatility. Let's come to the loser that we've got in the majors at the moment, which is USD JPY. And we're down 100 pips in this one. But she's trying to break out. She broke out there and trying to break again higher. Look, we've stalled. If I did get stopped out of this one, I'm not too far away from the stop, I'd immediately look to sell back through this level. Okay, just don't see much more upside in the USD. So if we did get taken out, I'd look to sell weakness. I do have this view, and I'm sure everyone has probably gathered it, that we're going to go to risk off. Yen will then really appreciate. But at the moment, just hanging around. We'll see if it can break out next week or break lower. If it breaks lower, it is a great sell in our view. Last pair. This is the one major that we've got our biggest allocation in. It's USD CAD. As I said earlier, CAD most overbought major of all. And in this one, we got near enough 200 pips. Not a big profit, but when it came down here, it's just, in our view, a raging buy. Because speculators sold very hard here. Commercials bought above this resistance level, support level here. And then we took off to the upside. But look at that. Last week, slow volatility, but 132, very solid support for the USD. Going up to 138 longer term. Got 135 as my first target. Crude oil, if that breaks down, could have an impact on the CAD, okay? Because when you see crude sell off, you very often get commodity markets just sell off generally, and the CAD is obviously a commodity currency. Now, the same argument applies to the other commodity currencies as well. So in the majors, overall profit, but not that much. What I want to do now is go and look at a couple of crosses, and we'll look at a few more USD and JPY pairs. So let's shift over to some crosses and take a look at them. Euro JPY daily chart. In terms of the euro against JPY, regular viewers will know we've been selling it for the last year and a half for any opportunity we can get. And the euro's come down quite nicely, but it did have a rally here, and then we rallied up to the 121 level. That's the biggest rally in over a year and a half, but we can't clear out the 121 level, come back beneath it, down, coming back. I would say limited upside here. If it gets above 121, fresh positions, just sell back through the levels 120.80, or if we don't, just take it through the 120 level below this double trend line, the 20-day moving average. It's a limp rally. If we get through here, 116, then 100. I always think it's a good idea to keep an eye on the longer term charts. You can see last year and a half, the euro has been going down. You do get rallies in between. This is the best rally, but we're going to struggle now to take out three bodies, a tail. Just feel going down 110 and then 100. So it's one to keep your eye on. Over the last few weeks, it's been a little bit boring with that choppy sideways action, but that will end in our view. And if the euro breaks down on higher volatility, look for a really big trend to develop. Next one, Euro GBP. This one, been following it for a good while. Took it basically when this rally failed, held it, got stopped out, basically came back at the same level as stop, and we've come down. Now, in terms of this one, it is around, 450 pips. Obviously, the rate of descent has slowed up, but is there more downside in the British pound? This is, again, we can look at the monthly chart. You can see the potential. That's a nice fall. That's only towards the 80 level, okay? 85 level. Got to keep in mind, all that's to do with Brexit, all that euro rise. So I do not see any reason why we can't get back towards the 80 level. And maybe longer term, we could get down to here. But certainly 80 is on the cards. So my own view is if coming in fresh, 85.27, you can sell through 84.80, or wait for the first decent bounce and watch for it to fade. It's a big downtrend. Okay, it's slowed up in recent weeks, but there's plenty more downside to come. Right, let's go and take a look at some more pairs, and we're going to start with some USD pairs that really interest us. USD CNH is the first chart. In terms of this is dollar offshore spot Chinese yuan. Obviously, it's very influenced by trade talks between the US and China. When there was a lot of optimism, the USD came down. Did a video when we had this red candle. We're just saying, just buy the USD on a little bit of strength, which you got in this blue candle. Come back above the 7 level, which is the key level for the People's Bank of China. And we're kind of basing above the level. If we go up on higher volatility through this candle tail here next week, we should quickly punch up to 720. If trade wars really get out of control, by that I mean the US and China really start, arguing, so to speak, we go even up as high as 10 longer term. A lot of upside in this pair. It's worth a small position. Stop could be pretty tight. Okay, we've got a small position in it. We think it looks really good. Moving to the next pair. I'm going to look at this one quickly, which is correlated with USD PLN. It is USD Czech Krona. Both look good. Doing a split trade between the two of them. Dollar sells off. Big support over here. Just takes some strength. Breaks the 20-day moving average, which you always like if we're looking for a big trend. Comes back. It holds. And now we're moving to the upside. But it's very low volatility at the moment, but this I think could develop into a really nice trend. Obviously, you've got chart highs, but I've got a monthly target of 26, so a long way to go. I think this trend could just be beginning. I like the Euro proxies. There's a Euro proxy we look at now, which I like as a swing trade, and it's USD SEK. Now, I did do a video on Euro SEK on Friday. I said I felt the Euro was a buy. I also like the USD as a buy. Both, in my view, are going up. Swedish krona pushes the dollar down. It's about near enough 5% move. And the krona has rallied across the board, but that's only because it was so oversold. The big fundamentals behind the chart, out and out bearish for the krona, come down to major support levels. Poke through this double trend line next week, buy, and I think she'll go up on a higher volatility back to chart highs. You can just manage it as it goes. But I would like to see if we do break up for a higher volatility within the first few days and follow through. Otherwise, we'd probably exit the trade. We'll have to see how it goes. But where I see it at the moment, looking for a breakout and follow through on high volatility back to chart highs. Right, let's go and look at just a few more pairs now. We'll go and look at GBP CAD next. Right, GBP CAD, the daily chart. And in terms of the commodity currencies, like I said earlier on, GBP has done well for us in all of them. Okay, this one has got far further to run. We're just so bearish of the CAD. Over the last week, a bit of choppy price action. This is good support. This is very firm support, 170. Go through 171. We go going off up towards the 190 level. Now, again, it's a good idea to look at the monthly chart because that's a nice big rise, isn't it? But when you see it in the context of the monthly chart, it's not that big. Could go all the way back up to 190, which is that Brexit candle, the top of it. But if it doesn't get to there, it'll get to 180. In our view, we're above the 20-month moving average. Going north, in our view, we really like this pair. A pair that could just be getting ready to go north is this one. Well, it is going north, but at a higher rate of volatility. USD SGD. Again, it's a kind of trade war talks correlated trade with Singapore having major trade with China. The optimism peaked here. USD recovers, and now it's going to the upside, just above our entry. But I think this one could really gain traction to the upside. As a long-term trend following trade, I think it looks really good. Even if trade wars are solved, Singapore is just so exposed to global trade, and that is slowing up anyway. Even if trade wars are solved, that is not going to see the global economy just recover. Okay, longer term looks good. 139 and 144 on the upside. Last pair I'm going to look at today is going to be this one, SGD JPY. If you can do it, looks really good. Big rally up in the SGD, and then we stall, come down, go back above 80. 80 was a big monthly resistance level as well, and also on the daily chart if I took it further left. If we get back through 80 and clear out the level, that will trigger follow through selling on higher volatility, and this level here just places stop behind it. Long way to go on the downside. Yen not really falling hard despite all this risk on. I think the yen is due some strength. Yeah, risk off, I keep saying it, could come at any time, but the yen isn't falling too much in risk on, so be alert in the yen pairs. Think in terms of just generally USD, looking fairly firm at the moment. I don't see much downside in the USD. What else? Obviously the CAD, we see that as a sell. Numerous other currencies, our particular favourites are obviously CAD, JPY, GBP CAD, and USD CAD. What else have we got? Did I say GBP? You probably gathered, obviously, we're still very bullish of that against the commodity currencies, the euro in particular, and some of the weaker credits, a little bit of a smaller position in GBP, USD. Lot of volatility last week or the week before, but I wouldn't get complacent because it's going to return. Like I've said, December tends to be a good trading month, so we'll see how we go. But I'll be back next week with a review. But until then, thank you very much for watching me as usual. Take care and have a good day.